If you're trying to grow your wealth internationally or protect assets across countries, you may have come across something called SPV or Special Purpose Vehicle. But here is what many don't realize. When you use an SPV in Dubai, it can give you major tax advantages and still stay fully compliant. In this video, I'll show you exactly how Dubai SPVs work for tax planning, and we will cover how they are structured, how they can reduce or defer tax legally, and why they're trusted by family offices, entrepreneurs, and professionals around the world. SPV is a holding company created for a specific legal or financial purpose. In Dubai, most international clients use DIFC or ADGM framework. These jurisdictions are well respected with independent common law system and access to international banking. And crucially, they both offer 0% corporate tax on passive income when certain conditions are met. Now, let's look at how that works in practice. Say you hold shares in an operating business, either in Dubai or abroad. If those shares are held directly in your name, any income or gain from them may be taxed at your country of residence or trigger succession complications later. But if you hold those same shares via a DIFC SPV and the income qualifies as passive, meaning it's not generated from a local trade or business, then under the current rule, there is no corporate tax in Dubai. That means the profit remains in a zero tax environment, ready to be reinvested or preserved for the future generation. And this isn't limited to shares. You can use a Dubai SPV to hold real estate, intellectual property, structured notes, or even your equity in overseas ventures. Each of these can benefit from the same treatment, provided that the SPV does not engage in active commercial operations. It's a clean separation, asset holding in one place and active operations in another. That clear distinction is what makes Dubai such a practical hub for cross-border wealth planning. There is another advantage here, and that's the treaty access. While Dubai's treaty network isn't as deep as some other countries, using DIFC or ADGM SPV can still provide favorable outcomes in cross-border tax situations, especially if the SPV is structured along with a foundation or a trust. In many cases, you can reduce withholding tax on dividends or royalties by having the SPV act as the beneficial owner. When structured correctly, it may also create eligibility for certain exemptions or relief under bilateral agreements. That leads us to something important, that is clarity and reporting. Unlike some offshore jurisdictions, Dubai structures are built with transparency in mind. You're not hiding ownership, you're organizing it. That distinction matters to banks, auditors, and increasingly to tax authorities. In today's environment, clean structures attracts less scrutiny and open doors. From bank accounts onboarding to global tax reporting standards like CRS, a Dubai SPV holds up under pressure. Now, while the headline rate is 0%, that does not mean SPV are invisible to tax altogether. You must still consider your own residency and any controlled foreign company or CFC rules in your home country. These can attribute SPV profits back to you personally, depending on how the structure is used. So SPVs are not about escaping tax. They're about deferring or reallocating it in strategic, compliant way that stands up to international scrutiny. Let's take an example. An expat entrepreneur sets up a DIFC SPV to hold shares in a European startup. Instead of receiving dividends personally, which may be taxed heavily in his home country, the income is received by the SPV in Dubai, where it is not taxed. If those funds are then reinvested into other ventures or used for international expenses, the entrepreneur can grow wealth offshore without triggering immediate personal tax. Over time, this allows for greater capital efficiency and long-term planning. Now consider another family with significant overseas property. By transferring ownership to a Dubai SPV, or better to a foundation that owns the SPV, they can eliminate inheritance concerns, reduce capital gains exposure, and simplify cross-border compliance. Again, the key is not the secrecy, but the structure. Families that think long-term often choose this route to ensure smooth generational transition and avoid legal complexity across borders. It's also worth noting that under the current rules, even when the new 9% corporate tax in the UAE applies, it does not apply to entities that earns only passive income and are not part of wider local business group. This makes DIFC and ADGM SPVs ideal for private wealth planning, as long as you are staying within the scope. It's important to regularly review your activities to make sure your SPV does not become taxable through operational activity. So how do you actually benefit from all this? First, you align your assets with a tax-efficient, reputable jurisdiction. Second, you gain flexibility to move or reinvest capital without triggering tax every time. Third, you open up better options for succession, banking, and global mobility, all while staying compliant. Is the combination of low tax, global respectability, and structural flexibility that makes Dubai SPVs such a powerful tool. But none of this happens by default. You need to structure it correctly. That means choosing the right jurisdiction, setting up proper governance, and aligning it with personal tax position. And in many cases, combining the SPV with a foundation, trust, or holding company gives you even stronger outcome. The key here is doing it correctly with the right setup, the right advisor, and clear long-term view. If you own a business or real estate, don't wait for legal or health crisis to start thinking about protecting your wealth. Many people think asset protection is only for ultra-wealthy. But the reality is that some of these solutions cost as much as setting up a free zone company in Dubai. If you want to secure what you have built and ensure your legacy, you can request your free and customized asset protection plan by clicking the link in the description below. And if you're serious about building long-term financial security, you should really check out my next video right here.